So literally hours ago, another multi-trillion-dollar bank has confirmed that $500,000 Bitcoin is not only closer than we think, but they're getting even more bullish on who is about to adopt Bitcoin. Now, let's not forget, that's the news today. But literally yesterday, the $4 trillion giant JP Morgan also made a little bit of a Bitcoin backflip, and it's not just these American-centric banks who are openly adopting Bitcoin at a very rapid rate. So before we get to the global adoption of Bitcoin by all of these massive banks, I want to jump straight into the news with my incredible, always optimistic co-host Opti, and we're going to get straight into discussing what is this brand new Standard Chartered $500,000 prediction. Why do they think that we're going to see $500,000 Bitcoin much quicker than most people think? We have some articles that we want to dive straight into here on this topic, and we're going to be talking about why Jeff Kendrick continues to get more and more bullish. Because again, this bank, Standard Chartered, this isn't the first time that they have been really bullish on Bitcoin. They've actually been openly promoting Bitcoin, getting bullish on Bitcoin for over 2 years now. In the very depths of the bear market, Jeff Kendrick was coming out and adopting and openly embracing Bitcoin when it wasn't even popular to do so. Let's not forget, back in 2023, Bitcoin was what? $15,000 a coin, $20,000 a coin. A lot of people at that time, in 2022 and 2023, they were saying, look, Bitcoin's going lower. Ignore BlackRock adopting Bitcoin. This is insignificant. This is just a bear market bounce. This is what everybody was saying about Bitcoin back in 2023. But no, there was one person or one bank in particular who was really alone in the TradFi realm, who was openly bullish on Bitcoin. And this is, of course, Jeff Kendrick from Standard Chartered. They have remained incredibly bullish, even in the depths of the bear market, the most recent bear market. They were openly predicting, look, Bitcoin's going to hit 100K in 2024. What happened? Bitcoin's pretty much at 100K by the end of 2024. So they've not only been right on that first prediction, which I think is massive signal, but they have also been right about many things along the way. They accurately predicted Trump getting into office, and they also said, look, Trump getting into office, this is going to be incredibly bullish. This is going to really spice things up in the Bitcoin space. And this is exactly what we have seen. We've seen things only get more bullish, things only accelerate. And right now, Standard Chartered, they're making some really bullish predictions. Okay, again, $500,000 Bitcoin, and it is coming much quicker than most people think. Now, before we get into the exact time frame that Standard Chartered has put out there on their newest Bitcoin prediction, let's have a think of the broader picture. So we have all of these massive banks getting into Bitcoin. We've got JP Morgan. We talked about them yesterday. Jamie Dimon, there's a new clip circulating online of Jamie Dimon, and he is right now saying, look, I'm not the biggest Bitcoin believer, but we're buying Bitcoin at JP Morgan. Again, let's not forget, we covered this earlier in the week. JP Morgan is holding a ton of MicroStrategy. Think about that for a moment. Why would Jamie Dimon publicly say, look, I'm not the biggest Bitcoin fan. I don't think it's an innovation. I think blockchain is the bigger innovation. Why is Jamie Dimon saying these things about Bitcoin? But then privately, at his bank, his massive $4 trillion bank, they're openly buying MicroStrategy. Do you think there's a little bit of signal there? Do you think this is maybe a little bit of a sign that Jamie Dimon's portfolio is kind of speaking for itself? I think it could be. I think a lot of these banks, some of them are going to be, a little bit more public with their Bitcoin embracement, like Standard Chartered. But then other banks are going to be a little bit more, let's say, guarded and a little bit more secretive, like Jamie Dimon. I think Jamie Dimon's intentions are a little bit hidden. But then, of course, we have all of the other banks adopting Bitcoin. Let's not forget Goldman Sachs, big big Bitcoin fan. They're sitting on $1 billion, which is huge. We also have lots of other really interesting, massive multi-trillion dollar banks that is openly embracing Bitcoin. We have UBS over there in Europe. We also have, what is it, the Swiss National Bank, the central bank, all the way over there in Switzerland, Opti, openly embracing and adopting Bitcoin. What are your thoughts on the lay of the land right now?
Well, I've been saying for a while, Luke, and great intro. Luke's doing an incredible job here. We're throwing him into the flames here on Simply Bitcoin. But yeah, it is becoming very interesting to see what is going on in the narrative shift around Bitcoin currently. As much as we've seen historic Bitcoin haters, talk trash about Bitcoin, the adoption of Bitcoin, we are seeing them seemingly pivot on a dime in the last couple of weeks. It seems like everyone is waking up to the very simple idea that, look, you can't just dig your head in the sand, ignore Bitcoin. You might need to get some Bitcoin, or rather some Bitcoin type exposure, as we're seeing with this news story from Standard Chartered. And like you said, the most interesting part about Standard Chartered is they just keep raising their price predictions here. And it's all based on a few things, and we will cover them right now. But it's the institutional adoption of Bitcoin, and of course, the new interest from nation states going full head and toes into Bitcoin. Things are heating up. I know we've been saying for a while, and there's been some bearishness on the show around the sentiment, but it seems like the end of this year, we might be in for some absolutely explosive moves. I know Luke and I were talking about it this morning, or rather yesterday morning, of dude, maybe 500K, even $1 million Bitcoin. It might be happening a lot sooner than we think. And look, obviously we don't know where the price is going, but it does feel like we might be going into some 2017 vibes here by the end of this year, and I'm all for it. So Luke, let's cover this article, cover the news source, and then we will chat about it. Luke, you're muted, I think.
There we go. I'm back. I was muted, but I do share that sentiment, Optic. I think, a lot of people are thinking, hey, we had that 2021 bull run that was a little bit lackluster. And again, for the past 5 years, I don't think we've seen a real Bitcoin bull run. I don't think we've seen a real Bitcoin bull run since 2017, to your point. So I think there's a lot of people who have entered the space post 2018. Again, that was the year that I started learning about Bitcoin. I didn't get to experience that parabolic rise, following the news as closely as I am today. So I don't even know what a real bull run feels like. But just having a look at the price charts and the sentiment and the videos from mid 2017, it looked pretty crazy. It looked pretty wild. And I think that could be maybe, I don't think maybe, I think it's going to happen. I think we are going to see a bull run like 2017. I would, if I was a betting man, I'd say the odds that we're going to see one in 2025, 2026 are so much higher than I think they were in 2020 and 2021. Why? Well, that's because, like we're covering today, Opti, the banks, they're all in Bitcoin. The banks right now have their Bitcoin bags loaded. I think the banks right now are not only ready to embrace Bitcoin, but they've already embraced it. I think they're ready to let it fly. That's why I think right now I'm super bullish on the Bitcoin price in the near term. Again, I think everybody should be thinking about things in probabilities, not certainties. But I think the probabilities that we're going to see a face melting Bitcoin rally today in 2025 much higher than 2020 and 2021, because we now have Standard Chartered saying, look, $500,000 Bitcoin price target is now the new norm. Now, again, these guys, they were predicting $100,000 Bitcoin in 2024, and it came true. And we can see, have a look at this. Here's a tweet from BMAG. Standard Chartered says that SEC 13 filings support Bitcoin reaching $500,000 by 2028, Opti. What do you think about that?
500K by 2028. Yeah, that seems reasonable to me. I mean, it's really, look, it's very interesting because when you think of their kind of reasoning to it, it does seem to add up. I know if you're new to Bitcoin, even if you've been in Bitcoin for a long time, from 1K or 100K to 500K, when the law of big numbers, it does seem like it's, you know, a big move. But in Bitcoin terms, a 5x in a parabolic move is not out of the picture here. It's like a non-zero chance that we'll see something similar. Obviously, there needs to be more capital coming into Bitcoin, but I think on a conservative level, 500K by 2028, that's, you know, a cycle away. I don't think that's that crazy.
Me neither, dude. And now let's break down the reasoning from Standard Chartered. So they're talking about these SEC filings. They're saying this is the reason for why we could see, you know, $500,000 Bitcoin. So they actually have reasoning. They're not just saying, look, the money printer is going to go burr. As Kaizen correctly notes in the chat here, we are going to be talking about the money printing bonanza that could be coming our way. But this website right here, Bitcoin Treasuries, 202 public companies right now have Bitcoin in their public treasury.
Hey,
now,
hey Luke, click it. Yeah, I'm looking at your Google tab here.
Yeah, I love this tab because it shows us the number, 202 public companies. And every single time I check this, I did a live stream on this last week, and it was 192 public companies. We've already seen another 10 public companies adopt Bitcoin in the past week, and this is the reasoning for why Standard Chartered could see $500,000 Bitcoin a lot quicker than most people think by 2028. That's soon, that's fast, that's much more rapid than most people think, but I think they actually have good reasoning to back up this massive bullish Bitcoin price prediction. They also have this really cool chart. Now this is showing the growth of the amount of Bitcoin held by governments. So you can see figure 1, government holdings of Bitcoin ETFs and MicroStrategy. Have a look at some of the biggest swingers on this chart. The light blue, this is looking at the Norwegian, this will be the Norwegian government or the Norwegian Sovereign Wealth Fund. The chart doesn't specify, but we always show you guys on this channel that the Norwegian Sovereign Wealth Fund and central bank, they're getting into MicroStrategy in a big way. So they are the light blue, really big chunks on these charts. And on the, what color are we going to call that at the bottom right here up there? We're going to call that green.
Dude, don't ask me. I'm colorblind. Bottom, it looks beige to me, but maybe it's green. I don't know.
Beige. Opti is colorblind. True story. True story. We're going to call that green. How about we call that lime green? But the lime green is showing us that that is Abu Dhabi's investment into the Bitcoin ETFs. Have a look at that growing and essentially going from 0 in Q3 2024 to a massive chunk in Q4 2024. And what I find interesting is this number has only grown and grown and grown since the last quarter of 2023. Now, this is the reasoning for why Standard Chartered thinks that, hey, things could be a little bit different. We have big boys entering the space right now. We have governments. We have 200 public companies being forced to release these SEC filings with Bitcoin on the balance sheet. And the number that I think is huge, Opti, is that one on the left-hand side of the screen. 3.33 million Bitcoin is held by public companies, private companies, ETFs, and governments. Now, again, this is, yes, people are always going to sell Bitcoin. I can't argue with that logic. But what I will say is that this is my opinion. I want yours in a minute, Opti. I think the large majority of the Bitcoin in public treasuries, private companies, and in particular government holdings of Bitcoin, I think that's going to be really sticky, so to say. I don't think these guys are going to be trading Bitcoin. I think these guys, if I had to be a betting man here, if I had to bet, I think they're going to be holding Bitcoin for the long run. And so, hey, we got 3.3 million Bitcoin there. We know that 4 to 5 million Bitcoin are lost. Already, we're looking at what, 7 to 8 million Bitcoin, I think is going to be locked up for the long term. Opti, I want your thoughts on that. Is that crazy moon boy logic, or is there a little bit of potential truth in that?
Well, that's where my gut is going as well. I mean, hearing kind of some of the sentiment you get out of like the BlackRocks or even Michael Saylor and some of the people that are following the Michael Saylor strategy, a lot of them are saying something very similar to what you said. Now, I did get some pushback in the chat when I first said that I think Wall Street is probably going to be holding this Bitcoin long term. We do know there's pension funds holding Bitcoin, though. There was an interesting news. I forget which one it was. They basically bought some Bitcoin and then they sold it. So maybe we have some data points to show that maybe they're just here for the fiat gains. But I'm also kind of on the sentiment that it looks like these institutional buyers are going to be holding Bitcoin long term. And if that is the case, obviously we won't know until hindsight. But if that's the case, that they're going to be essentially hodling Bitcoin, then, you know, this whole 3 green, 1 red meme that we've had for a while, of course, so talking about the bull run or the Bitcoin cycles, it's 3 years that are positive and 1 bad, you know, bear market year. I'm starting to lean towards the idea of what Standard Charter is saying here, that maybe we're not going to get a 2026 bear market. And if that is the case, then that would lead to the idea that these institutions aren't selling their Bitcoin. Now, going even further, we know what Senator Lummis has been saying, and we will be talking a little bit about Senator Lummis later in regards to the stablecoin bill. She has been advocating, RFK Jr. has been advocating, and it looks like Trump is a fan of what Senator Lummis has been saying, that they want to buy 1 million Bitcoin and lock it up long term. So if that's the prevailing sentiment here, that they want to hold Bitcoin long term because of all of the crazy uncertainty in the traditional financial market, it sounds like they want to hold this stuff long term. They want to hold Bitcoin. They want to hodl Bitcoin on a nation state and institutional level. And I think that could be the catalyst to really break the cycle theory. Obviously, we don't have many data points here in regards to the cycle theory. We only really have 3. But if we do have these big institutional capital players that are holding Bitcoin and they don't get freaked out because of volatility, obviously they're the smart money, they're the traders here. So I'm sure a subset of them will trade Bitcoin, and it could be the majority of them that trade Bitcoin. But we are seeing that we are entering a new demographic of people buying Bitcoin. And if they do follow the HODL meme, then I think we might be able to say that we are not going to see these crazy drawdowns in 2026 and beyond. It could just be up and forever.
Yeah, I mean, it's really interesting. You mentioned a lot of really interesting things I want to unpack there, Opti. For anyone who might be new, this is the cycle theory. This is the 3 green, 1 red kind of motion that Bitcoin has followed for 16 years. Typically, Bitcoin goes up for 3 years in the halving year and a couple of years after the halving. And then we typically have a little bit of a consolidation period. Bitcoin gets into a little bit of a parabolic bull run that gets ahead of itself. It gets a little bit overextended. So naturally we have a year's worth of cooling off. But what I think is really important that people need to study if they're new to Bitcoin on this chart is...
Uh-oh. We lost Luke. All right. Well, essentially what he was saying, and I guess I can show you here. I'll pull it up. I'll pull it up on my trading view. Oh, is he back? Is he back? Okay. Luke, your South American internet, bro.
Dude, I think we were just getting too bullish, and maybe we got kicked off YouTube, because I was about to make the case for why we might not see one of those big, massive 80% 12-month extended bear markets, okay? That chart's a really interesting one, and it's a really important one to study, because I think a lot of people are taking the data from this past 16 years of Bitcoin. I think they're extrapolating it forward. They're saying, because we've had these 3 data points of Bitcoin going up for 3 years, down for 1, up for 3 years, down for 1. Even a lot of people are saying, look, we know with certainty that we can track this data with a power law, and we can predict exactly where Bitcoin's going over the next 16 years. Now, Opti, you raised a really good point. The demographic of the buyer in Bitcoin, they are a completely different person today. Again, this is why we focus on these announcements that they come out nearly every day. We have a new announcement of another massive bank upping their Bitcoin price predictions. Or we have a JP Morgan quietly buying MicroStrategy while publicly bashing on Bitcoin. I think all of these quiet and more public announcements and embracements of Bitcoin, it's the signal. The signal is the buyer of Bitcoin has changed. Pre-2020, I think 99.99% of Bitcoin's trading volume It was dominated by the little guy. It was dominated by retail plebs who were just buying Bitcoin to get rich, and they were going to sell it in a bull run to buy a Lambo. Now I think the demographic of person has completely changed. Now, instead of wanting to buy Bitcoin to get rich and buy a Lambo, the people getting into Bitcoin today, they're potentially selling their Lambos to buy Bitcoin so they don't get poor. It's a completely different 180 flip, okay? We're seeing the largest, safest, most conservative capital allocators around the world openly say, I want to buy Bitcoin to preserve my purchasing power. I don't care about fiat, materialistic things like a stupid Lambo. I want to buy Bitcoin so I don't get poor. Now, again, it sounds like a bold statement just coming from a 28-year-old kid with a crazy haircut, right? Who don't believe Luke. How about you believe Peter Dunworth? He was on the channel recently and he was openly saying, look, a lot of the clients that I service, again, Peter's a money manager, has been for a long time and been in finance for a very long time, multiple decades. He's saying a lot of the boomers who are his clients are selling real estate to buy Bitcoin so they don't get poor. Because people are beginning to come to the realization that if you have 100% of your assets in the fiat system, tied to real estate, tied to housing, or in a superannuation fund, you will become poor because your government will simply raise the taxes on your fiat denominated assets. Now, I know it sounds crazy, Luke, you're just making a hypothesis here, but it's not a hypothesis. Look out amongst the world. For literally hundreds of years, not hundreds of years, but for a very long time, there's only been two governments, two countries around the world that have citizenship-based taxation, America and Eritrea. What that means is if you live in those countries, it doesn't matter if you leave those countries and go and live in Europe for 20 years, you still need to pay taxes to the American or Eritrean governments, okay? So again, it's a wild concept, it's a wild theory, but it's just showing the tax man in the West, it's been trying to trap its entrepreneurs, its business owners who want to use technology and flee their countries. So it's a wild law, citizenship-based taxation. But have a think about all of the Western countries who are now saying, hey, we kind of like that model, citizenship-based taxation. We actually want to try to change the tax laws and implement it in our country. In the last 3 years alone, we've seen Canada mention they want to change their tax policies to something a little bit more like that. The Australian government is about to ram through one of the most egregious bills that I've personally ever seen in the Australian government. As of July 2025, so literally a month or two, if you're Australian and if you've got money in your superannuation account, you're about to be paying unrealized capital gains of 30% if the value of your portfolio goes up. So if your retirement account goes up, sorry, you need to pay 30% capital gains tax on that, even if you didn't sell it, unrealized. And guess what? Guess who's exempt from these taxes in Australia? The people making the laws. Police officers, judges, politicians, they're all exempt from this egregious policy. So again, I'll put my Australian rant to the side of the table for a moment, because it's not just Australia and Canada. We have France talking about unrealized capital gains and citizenship-based taxation. And I just think there's some really scary signs in the West. And I just think people are going to need Bitcoin much sooner than they might think. And I think now that the bankers are coming in, we do have this new type of buyer, this new entity in the Bitcoin space. I'm less confident in saying that we're going to see 80% drawdowns with these extended 12-month bear markets. I think we could still see a lot of volatility. Again, there's money to be made by pushing the price of Bitcoin around and, maybe exaggerating some of the corrections and the crashes. So sure, I'm not saying we're never going to see an 80% correction again, but what I don't think we're going to see is these long extended 12-month bear markets. I think when Bitcoin crashes down, I think you're going to have some really big entities with some really big buy orders just scooping up all of that Bitcoin. So Opti, what do you think about that long extended rant there?
Well, I do like that take of no longer having long extended bear markets. I'm totally for this. Obviously, we really don't know. We're just looking into a crystal ball. But the metric of having a new demographic buying Bitcoin is backed by data. I don't have the chart right here on me right now, but I did see last week on Twitter that while we're seeing this incredible accumulation from institutions happening, on the opposite side, we're seeing a lot of individuals selling their Bitcoin right now. So, this is kind of a worrying trend in regards to the idea that we always talk about it being the people's money. Now it seems like, a lot of maybe old Bitcoin OGs, holders that have been using Bitcoin, holding Bitcoin for a long time, are now kind of taking their profits. And who is buying this? The BlackRocks of the world, the Michael Saylors of the world. Now, we're seeing basically some of the biggest banks in the world trying to get either ETF exposure or MicroStrategy exposure. So the demographics is fundamentally changing. And there's a good comment here by Moonshine Fuel kind of backing up that theory. He says, it is possible, essentially what Luke and I are saying, that these institutions want to attract even more institutional investors, and to attract even more, you want less of an impact on the drawdown. So this could be where we're at right now. And a lot of us are obviously, we've been Bitcoiners. We are kind of, I don't want to say stunted by previous bull cycles and the old Bitcoin theory, because obviously we cling on to the models that work until they break. But it does seem like we are seeing a completely different metric here, or rather different demographic of people buying Bitcoin, and they may be using Bitcoin in a different respect. I covered yesterday what's going on in the bond markets, and I do have an interesting thread follow-up from Mark Moss. And the point that you made, Luke, I think is spot on. We're no longer just seeing the degenerate Bitcoin, quote unquote, speculators here, buying Bitcoin to get rich. We are seeing the wealthiest people in the world realize that, hey, if I don't get money into Bitcoin, I'm going to lose a lot of my wealth. And so we have switched from extremely wealthy people looking at Bitcoin to preserve their wealth versus us trying to accumulate our purchasing power and, get out of the rat race. Now they're like, hey, things are blowing up. I might need to get an apolitical, neutral money that cannot be debased. And of course, that is Bitcoin. So there is a fundamental shift in the narrative going on right now. And it's even on the nation state level. We're seeing the nation states kind of look at it the same way. It's like, if we don't adopt Bitcoin now, we're going to get left behind. So it really is a fundamental shift. But Luke, you brought up a chart. Is this the chart I was just talking about?
That's the chart you were just mentioning, my friend. You can see in the gold bar on the right-hand side, 525,000 coins have been paper-handed by individuals in 2024. But who's bought those coins? Look at those big blue bars on the left-hand side. 519,000 bought by hedge funds, ETFs, and businesses have bought 374,000. So that's entities like Saylor and a lot of these entities who I think, again, I don't know. I have no idea. I'm a crazy 28-year-old kid with a wild haircut on the internet. I don't know what's going to happen. I think that these entities are going to be a lot stickier with their hands. I think they're going to be grasping onto their Bitcoin for much longer than most people think. Again, people said in 2020, when Michael's plan was to publicly hold Bitcoin for 100 years, that's what Saylor said in 2020 after he first started buying Bitcoin. Look, Bitcoin's pristine asset. I want to hold it for 100 years. He said that in 2020. A lot of people were skeptical. Even a lot of Bitcoiners are like, yeah, he's just going to be a degenerate fiat bro. He's just trying to leverage money and, buy something that's going to go up in a bull run. This was the opinion of many Bitcoiners. Many people said, don't trust Saylor. It's 5 years later, he still hasn't sold anything. And if anything, he's gotten even more bullish. So again, I'm not saying every public company or every government getting into Bitcoin is going to literally hold Bitcoin for 100 years, like I think Michael wants to in his company. But I think a lot of them are going to be holding Bitcoin for the long term. That is for sure. So that is where I start to get a little bit more bullish than most people. Because when you start running the numbers, you start having to think about things. You're like, all right, 4 to 5 million Bitcoin, we know are lost. Now we have, 3 million Bitcoin in the treasuries of ETFs, public companies, and a lot of these pension funds. I think a lot of that is sticky. So all of a sudden, you've got 7 to 8 million Bitcoin out of the 19 million Bitcoin that have already been mined. A lot of it is already locked up for what I think is at least the medium term or the long term. So this is where Bitcoin gets even more scarce. And I think, again, what's Michael's end game here? His end game is to buy as much Bitcoin as possible. What happens if he alone gets to 1 million coins and he doesn't want to sell it for 100 years, like he says? What happens if just about a couple of other billionaires or a couple of other public companies start saying, yeah, I actually wouldn't mind holding more of this Bitcoin stuff than Michael Saylor. Opti, I think that's when the math gets interesting. That is where I think things start getting crazy. And that is where I think not even the most bullish of Bitcoiners have truly appreciated just how scarce Bitcoin is.
Yeah, 100%. I couldn't agree more. And what's very interesting, though, is if you look at the new demographic, obviously in the last couple of months, we have finally fulfilled the meme that institutions are coming. You know, Bitcoiners have been like Paul Revere for a long time. The institutions are coming. Like they're coming, bro. They're on the sidelines. They're going to pump our bags. And now we know they're here. And furthermore, we know that Wall Street has a whole new appetite for Bitcoin, or at least it's opening up. And we got to remember, Wall Street traders, you know, you think Bitcoin traders are degenerates. Wall Street traders are way bigger degenerates. They literally move all the capital markets. And so you got to remember, they're not afraid of volatility. They love volatility. As Saylor said, you know, volatility is life. Volatility is profits. That's where you make your wealth, is by taking the risk and looking at volatility as a sign of a healthy market. And that's where you make your money. That's where you get your edge from. So I don't think volatility is going to scare away Wall Street or these institutions like it does, say, you know, the retail investor, or, you know, maybe the people that are going to be the most afraid of this are the pension funds and stuff, because obviously the more conservative investors, or the more conservative capital allocators, they obviously do not want to put their wealth in something that is very volatile and speculative. They just kind of want a gradual, steady climb upwards. But the institutions are here now, and Wall Street is not afraid of volatility. So I have been leaning lately, and I really don't have anything to back it up because I'm just reading the news and I'm just following what's going on. It does feel like 80% corrections are off the table. I'm kind of going towards more like a, wait, which way? This way. A more like stepwise function where, you know, it's sideways, then it goes up, and then it goes sideways. That's kind of the new structure that I think I'm like just intuitively feeling right now. And I, you know, this is just one man's opinion here. This is kind of what I'm feeling might play out. But it does seem, with all the influx of capital going into Bitcoin, even though it's Bitcoin ETFs or MicroStrategy, as Standard Chartered was saying, as Jeff Kendrick was saying, and, you know, hey, I'm in my mid 30s. I'm not a, you know, TradFi analyst here. I don't have experience long term on what's going on. I learned through the traditional financial system in the lens, or through the lens of Bitcoin. It does seem like the new capital flowing into Bitcoin is holding Bitcoin long term. And if that's the case, I think we're going to see less, you know, huge, long, prolonged bear markets, and more just kind of chop solidation and then just keep moving upwards. So it is very interesting to see that Standard Chartered out here, Jeff Kendrick, they're analysts. And one caveat I read in that article is they don't even hold Bitcoin. They're just looking at Bitcoin objectively, and they're like, yeah, this is going to go up. And sorry, my 120K prediction by Q2 was probably bearish. And yeah, maybe 500K by 2029. Like, if the conservative people, the objective people that aren't obviously confirming their own bias like we do, are saying, yeah, this thing is going to rip. I think it's safe to say that things are fundamentally changed. Things are different. And I know us Bitcoiners love models, and we need maps to the road so that we can kind of understand what's going on. I think, Dorothy, we are no longer in Kansas anymore, and things are going to get very, very interesting moving towards the end of this year, and of course next year. And all the interest around Bitcoin, it's starting to make me think like, I really don't like the meme, like there's not enough Bitcoin to go around, but there's not that much Bitcoin for all of these billions of dollars to be buying Bitcoin. So things are going to get crazy. I'm obviously super bullish. But Luke, before we move on, do you have any last closing thoughts to this segment? Standard Chartered moving up their price predictions to 500K by 2029. Things are getting crazy.
Yeah, my final thoughts. I pulled up a couple of receipts here to show that we actually have the old Standard Chartered predictions. Have a look at the date of this article, April 24th, 2023. When Bitcoin was unpopular, when Bitcoin was boring, when Bitcoin was under $40,000 a coin, Standard Chartered was the one big TradFi institution putting their reputation on the line, openly been really bullish on Bitcoin. Again, this is April 2023 on a chart. The price was under $30,000 a coin, and they said by the end of 2024, $500,000 Bitcoin is coming. So I think they absolutely nailed that prediction on the head. Now, again, we are not about appeals to authority here on the channel. Again, nobody knows where the price of Bitcoin is going. But what I will say is I find it pretty interesting. And I think it's a little bit more meaningful that now Standard Chartered said, yeah, you know what? We were bearish. We actually think 500K by 2028 is where Bitcoin's going to go. So again, I think there's a little bit of signal there, guys. I think there's a little bit more to this prediction from Standard Chartered than actually meets the eye. And I think the bank is getting into Bitcoin. That is the signal we need to take from this little segment. I know Opti and I are going to talk about a few of the other banks adopting Bitcoin a little bit later on in the show. But for now, that's all the bullishness I've got on Standard Chartered.
All right, let's go, guys. We got a jam-packed show. We got a clip coming out of the SEC. Apparently, they are looking at the playing field, and it's seemingly going to be different than Gary Gensler there. And then we got some interesting stuff coming out of, the Senate or Congress about the stablecoin bill. I'll unpack it from both perspectives. But before we go on, Nico is paying ourselves $5 and saying Luke's haircut is $100. And Ron P also sent $5 earlier. I can't pull that one up, but thank you guys. Again, before I move on, guys, I want to tell you guys to smash the like button, hit the subscribe button, and of course, comment. Are we too bullish on this show? Are we smoking the hopium on Simply Bitcoin, or are we giving you guys conservative numbers? It's starting to feel conservative. Anyways, before we move on, I want to give a shout out to our boys over at Bitcoin Well. Go to bitcoinwell.com/simplybtc and sign up to Bitcoin Well. They are self-custody by default, which literally means you can't buy Bitcoin unless you have a way to get that Bitcoin into cold storage. You need a Bitcoin wallet to buy Bitcoin from them, because there is no possibility of them ever rug pulling you on this platform. This is why we love Bitcoin Well. There will never be a chance for them to not give you the Bitcoin that you bought. Once the fiat clears, once your dollars clear, the Bitcoin is sent directly to you. Of course, scan the QR code. And when you sign up, you get a chance to win 3 tosses into the Bitcoin wishing well, and you could win up to 1 million sats, which is what, around $1,000 right now. So use the promo code SimplyBTC and sign up to bitcoinwell.com. On that note, guys, we got a jam-packed show and we got to move on.
I want to tell you guys about our sponsor, Stamp Seed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stamp Seed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on Stamp Seed. And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, guys, we are over here on Clark Moody's dashboard looking at the Bitcoin time chain numbers. Currently, the Bitcoin price is $106,080. The sats per dollar, aka how much Bitcoin you can buy for a single dollar, aka how much the dollar is worth in Bitcoin, is currently at 943 sats per dollar. Though, actually, side bit, guys, sats versus bits is back on the table. This is how you know Bitcoiners are getting bored, when we start arguing about sats versus bits. It's one of my favorite, just very stupid arguments we get into every couple of months. It's back on the table. So, people are starting to feel bullish when we're arguing about dumb stuff. All right. So block high is currently at 897,585. And the current Bitcoin market cap, this is a new all-time high, guys. In terms of market cap in dollars, we are at $2.11 trillion, a new all-time high in Bitcoin market cap. I think it's signs of the times, guys. Bitcoin is growing up. The Bitcoin versus gold market cap is currently at 9.23%, not even 10% of gold's market cap, which is, of course, $22 trillion, guys. It's going up forever. Anyways, the total money supply is currently at 19,867,235.22 Bitcoin, which means the total percentage of Bitcoin ever to be issued is 94.6%. The realized monetary inflation is 0.84%. And look at that, guys. The decline from all-time high is only 2.9%. We are running, boys. This is starting to get exciting again. Once we break all-time high, I think things are going to get crazy. All right. Anyways, as I mentioned earlier, we are seeing a lot of favorable things come out of the Trump administration, or rather the U.S. federal government around Bitcoin. This is kind of the trend of today's show. We talked about in the beginning, Standard Charter essentially saying, hey, we are going to have to move up our price predictions because of institutional adoption, nation state adoption, and of course, regulatory clarity around Bitcoin. So let's play this clip. We'll chat about it, and then we will move on.
I want to say that it is a new day at the SEC. I'm determined that we return to our core mission that Congress set for us more than 90 years ago. The SEC's three-part mission, as the chairman stated earlier, was enunciated by Congress in the Exchange Act, and that's investor protection, which is vital to our mission, holding accountable those who lie, cheat, and steal. Capital formation is also at the root of what we do, fostering a direct economical route for investors' capital to find its way to entrepreneurs and industry to create products and services. And the third core part of our mission is maintaining fair, orderly, and efficient markets. Congress calls on the Commission to ensure that our regulations balance costs and benefits, that they do not become too burdensome by adding needless friction to the marketplace, thereby undermining the capital formation that yields so much benefit. My time in public service and in the private sector has allowed me to see firsthand how regulations affect markets and investors. They can stoke innovation, facilitate investment goals, and create opportunities or burdens on businesses' ability to compete and to serve their customers. How we implement regulations at the SEC is crucial. It's one thing to write a regulation, quite another for it to achieve its intended goal. Regulation should be smart, effective, and appropriately tailored within the confines of our statutory authority. A key priority of my chairmanship will be to develop a rational regulatory framework for crypto asset markets that establishes clear rules of the road for the issuance, custody, and trading of crypto assets while continuing to discourage bad actors from violating the law. Clear rules of the road are necessary for investor protection against fraud. Policymaking will be done through notice and comment rulemaking, not through regulation by enforcement. The Commission will utilize its existing authorities to set fit-for-purpose standards for market participants. The Commission's enforcement approach will return to Congress's original intent, which is to police violations of these established obligations, particularly as they relate to fraud and manipulation. The SEC is returning rulemaking to regular order. Our comment periods will not be artificially short, and the public will have ample time to provide feedback. The SEC will also be sure to take into consideration how rules overlap and how regulatory burdens build, in keeping with our obligation.
Okay, guys. So the big takeaway, obviously, this was a testimonial at Congress. What we're seeing here is that the SEC is obviously changing on a dime. As we know with Gary Gensler, a lot of us Bitcoiners were kind of hopeful about Gary Gensler being in his position, head of the SEC, but it wasn't that favorable. And a lot of people say, you know, he launched a Bitcoin ETF. Yeah, but they probably could have done it sooner. Maybe it was a good thing. You know, I've been trolling and saying Gary Gensler was a maxi. Anyways, what we're seeing is that they are fundamentally changing their tune around Bitcoin. Gary Gensler was very big on regulation by enforcement. Now we're seeing that the new SEC head is basically saying that's, you know, that was a mistake. We're going to make very clear rules of the road, quote. They've been saying that meme for a while, and it's starting to sound like we are going to see a more laissez-faire, hands-off approach to Bitcoin, and this is starting to make me a little bullish. Obviously, I'm not the biggest fan of the SEC in general, but as long as they don't fight Bitcoin, as long as they don't fight Bitcoin businesses and scare entrepreneurs and businesses out of the U.S., I think we are you know, confirming what we've heard and been talking about and speculating on the show for a while. We are going to see a very favorable regulatory environment around Bitcoin, and I'm kind of here for it. Like, as long as they get out of our way, I think Bitcoiners and Bitcoin will win. Just stop fighting us, let Bitcoin do its thing, and it seems like that is the trend we are headed towards. So I am backing this statement here. It seems like Bitcoin and quote-unquote crypto are one of the big things on their list, top of the list here, because we do have another news story on this. But this is a fundamental shift away from what we saw from Gary Gensler heading the SEC. Very exciting, very bullish stuff here. So, Luke, what's your thoughts on this? I know you're not American here, but what are the implications of this?
Yeah, I mean, I think it's just huge to actually have the wind at our backs. We finally have the sails pointed in the right direction, so to say, said as someone who has no clue about what a boat is. But what I think is interesting is Michael Saylor said, look, $5 million Bitcoin, for us to get there, we just need three things. It's the ETFs, fair value accounting, so favorable regulations on our side. This was one of the biggest things that Saylor said we needed for $5 million Bitcoin, and the banks to embrace Bitcoin. So I think this most recent clip from the SEC just confirms, look, we now have the catalysts in place to trigger $5 million Bitcoin. Now we're just waiting for the price to catch up to Bitcoin's fair value. And again, that's the asymmetry. We're just waiting for the world to realize $100,000 a coin is incredibly cheap and it's incredibly early.
God, I love saying Bitcoin is early. That's one of my favorite things. Everyone's like, no, we're not. We're so late. Nico even said that yesterday. We're so late. It's at 100K. I'm like, bro, we are early. We're totally early. Anyways, let's go into some more regulations, or rather some more, I don't know, tentatively positive news around Bitcoin. You guys know my takes on stablecoins. So, well, let's just get into it, because I have mixed feelings on this.
I want to give a shout out to our sponsor, Casa. Casa makes self-custody easy and secure. As a Bitcoiner, I care about holding my own private keys, but multi-sig can sometimes get tricky. Casa nails it with a multi-key security. So even if one key gets lost or stolen, your Bitcoin stays safe. And you don't give up custody, meaning no one could access your Bitcoin but you. No seed phrase anxiety, no single point of failure. I've been telling my friends and family about Casa for years. Their UX and UI on their app is by far the best in the industry. Inheritance planning is built in, and they even offer Casa for Business if you're thinking about a Bitcoin treasury. Hit up casa.io today and use promo code SIMPLY to get 10% off Casa Standard or Casa Premium. Head over to casa.io.
I want to give a shout out to our partner, CoinKite. If you take your Bitcoin security seriously, you'll need the best Bitcoin hardware wallet on the market to take self-custody. That's where Cold Card comes in. The Cold Card Q is the most advanced Bitcoin signing device ever made. It's got a full keyboard, larger screen, and NFC support, making air-gap signing easier than ever. It's built for power users who want the ultimate security without sacrificing usability. And if you're looking for a battle-tested, uncompromising cold storage, the Cold Card MK4 is your go-to with PSBT signing, an industrial-grade secure element, and USB-C. It's the perfect blend of security and convenience. Both devices devices are, of course, 100% Bitcoin only, open source, and built by Bitcoiners for Bitcoiners. Secure your Bitcoin the right way with the Cold Card Q and the MK4. Head over to coldcard.com today and use promo code SIMPLY to get 5% off anything on the store.
All right, guys. So I have a lot to unpack here, so I got to jump straight right into it. So Eleanor Terrett, she's been doing really good journalism on Twitter, has some scoops and breaking news on stuff. But here is like, a lot of people are saying the big news of yesterday. So Eleanor goes, just in, motion to invoke closure on the motion to proceed to the consideration of the Genius Act has passed. Of course, it's kind of been dubbed, the stablecoin bill. 15 plus Democrats flipped their votes from no to yes, which I think might be the most interesting aspect of this. It was a bipartisan move here, and it passed. So going through a little bit, I got a headline here from CNN. Senate advances first of its kind cryptocurrency legislation after Democrats initially blocked it amid Trump crypto deals. Of course, the anti-Trump stuff, it's just kind of part of the take. Second one from NBC News, which I think really highlights what's going on. Senate advances a major crypto regulation bill on a bipartisan vote. And this is probably, not only is it first of its kind crypto regulations being passed, which we'll chat about a little bit, but it was bipartisan. It was no longer just the Republicans being pro Bitcoin or pro stablecoins. We got some Democrats finally on board, which is awesome. All right. Now going into this a little bit, like what is the Genius Act? What does it do? So I got a fact sheet from Senate.gov, and we go, the Genius Act protects consumers, and just kind of diving in, it says, at its core, the Genius Act is a consumer protection bill. Payment stablecoins are a product already offered in the U.S. with little regulatory oversight. This legislation establishes a first of its kind federal framework to regulate payment stablecoins that include, among other things, robust reserve requirements to ensure payment stablecoins are not depegged and transparency into the reserves backing payment stablecoins. The Genius Act establishes federal safeguards that protect stablecoin holders and enhance consumer confidence in the permitted payment stablecoin market, including and requiring 100% reserve backing with U.S. dollars and short-term treasuries or similar liquid assets as determined by the primary regulator, monthly public disclosure of reserve composition, and annual audited financial statements for issuers with more than $50 billion in market capitalization. The Genius Act establishes strict marketing standards for payment stablecoins. Essentially, it prohibits any representation that the payment is stablecoin are backed by the full faith and credit of the U.S. government, by the U.S. government, or covered by FDIC insurance, making it unlawful to mislead consumers about government backing or the insurance status of payment stablecoins, and ensures that they cannot be marketed in a way that a reasonable person would perceive the stablecoin to be legal tendered, issued by the U.S., or guaranteed or approved by the U.S. government. And it makes it illegal to market a digital asset as a payment stablecoin unless it follows these guidelines. Now, this is, I don't know, stable coins are not my thing, but let's just get some takes from some politicians' view on this, and then some Bitcoiner takes on this, and then we will chat about it. So Senator Lummis goes, the Genius Act is pro-innovation, pro-consumer, pro-America. We need the Genius Act. Obviously, it passed. Bo Hine says the bipartisan closure vote is a major step toward securing the future of American finance. The Genius Act will strengthen dollar dominance, upgrade our payment rails, and position the United States to lead the globe in digital asset innovation. It's time to cement America's leadership and pass this historic legislation. And then we got Senator Bill Haggerty. He goes, tonight, the Senate moved forward on the Genius Act. This groundbreaking bipartisan legislation will bring America's payment system into the 21st century. The Genius Act skyrockets the United States with a digital payment framework with the fastest rails possible. It will ensure U.S. dollar dominance. Customers will be protected. The demand for U.S. treasuries will balloon to the tune of more than $1 trillion, and innovation in the digital asset space will thrive in the United States going forward. I look forward to making history with my colleagues this week, and follows it up with a clip basically saying stablecoin issues will be the largest holders of U.S. treasuries in the world. And this is probably where, my spidey senses pull up. But anyways, Nico tweeted, breaking, Genius bill passes through the cloture vote with 66 votes. Someone asked Grok, is this good for Bitcoin? And, tentatively, I guess it's not bad for Bitcoin, but I'm I don't really care about stable coins. You guys know my view, but I guess it may be a good thing. So Grok responds and goes, the Genius Act, likely the Genius Bill, regulates stable coins and not Bitcoin directly. It passed a vote. Stable coins using Bitcoin trading gain stability from clear rules, boosting market confidence and indirectly benefiting Bitcoin. So I think this is why a lot of people are saying that this might be a good thing. But I saw an interesting comment here from Simon Dixon, and he responds to Bill Haggard, and he goes, there it is. U.S. stablecoin bills coming, but the yield won't be passed on to the consumer to buy Bitcoin to protect themselves. It will be retained by the issuer so they can buy Bitcoin with U.S. debt. It's a debt-based Ponzi scheme rollover rather than monetary reform. And Kaiser says something very similar, echoing it. So in response to Bill Haggard, he goes, nope, U.S. dollar stablecoins will hasten the demise of the dollar as private companies compete with the Fed to flood the economy with trillions more ersatz, fiat nonsense conjured from thin air. It's a distraction from the true task at hand, accumulating Bitcoin in a strategic reserve, which is more of my take. Mentioning what Bo Hines said and Bill Haggerty said, payment coin or stable coins will ensure the dollar dominance. And this is why the politicians, I think, are moving forward. This is not what I'm in Bitcoin, but the Grok take is kind of where my head is at. Like, first they're going to pass some stable coin regulation through so that they can maintain dollar dominance. But I think with that, Bitcoin will essentially now is almost going to be codified. If this gets pushed in, they're not going to be able to touch Bitcoin. So on that front, I am kind of good. And the last thing I want to mention is what Frank Corva said here. And he goes, in the Dems' critique of the current iteration of the Genius Act, they continue to associate crypto mixers with illicit finance, even though a memo published by Todd Blanche in April stated that those who abuse this tech, not the tech itself, should be of concern to the government. And the last thing, actually, I have to find it. The last thing that makes me feel really good about this Genius Act being, passed or passed through cloture is Elizabeth Warren's response to this. She was not happy about this, which means on, a very, very simple heuristic. If Elizabeth Warren is not happy about this, then I am happy about this. So, let me pull that up on Twitter. And Luke, give me your thoughts while I pull up this tweet.
Yeah, so my quick thoughts here is that stable coins backed by US treasuries is, again, this is a controversial take, but I think it's actually going to help prolong the US dollar's global reserve currency much longer than most people think. Opti even said it a second ago. There is a scenario where these US dollar stablecoins could be the biggest holder of US treasuries around the world. And this is happening at a time when the world is dumping treasuries. This is happening at a time when all of they're all trying to de-dollarize. For the first time in a long time, that news article dropped in the Wall Street Journal a couple of years ago. Only 80% of global trade is now, 80% of global oil sales is being settled in US dollars. Again, it doesn't sound like a big change from 100 to 80%, but it's the rate of change that's really interesting. The world is de-dollarizing. The world is saying, hey, I want gold in my reserves for my central bank. And slowly but surely, countries are not only not accumulating US dollars, they're dumping them outright, like Japan and China. So I think now that we have a new buyer of US treasuries, who is now, the 15th largest holder of treasuries in the entire planet, Tether alone, I think the US government is incentivized to let these stable coins do what they do. And I think by proxy, this is great for Bitcoin, because the more Bitcoin adoption we have around the world, the more demand for US dollar stable coins we have around the world. And look who is going to get even more mad as we see this adoption of stable coins around the world. Opti, what are we looking at?
Yeah, this might be the biggest signal here. This is Elizabeth Warren after they passed this Genius Act. As you can tell, she does not look very happy about it. So I think this is a W here for us Bitcoiners. But yeah, no, Luke, you hit the nail on the head. Bill Haggerty said it himself, and we all know kind of how the best structure of stablecoins work is they're buying U.S. treasuries. And, I'm not here to continue the fiat games to continue, and it's going to be codified that they literally need to buy cash or U.S. treasuries to back the peg here. So I really like Simon Dixon's take on this. It's like, look, you get lulled to sleep by thinking that your currency is stable, but you don't get any of the yield in regards to the treasuries here. And for a lot of people, I understand the take that people in South America, they need a stable currency. So first they'll go to stable coins and then eventually they'll go to Bitcoin. But to me, it just seems like, why put unnecessary steps there? Just buy Bitcoin. You'll be better off. You will get the gains. You will get, quote unquote, the yield here. So I'm obviously conflicted here because I'm not here for US dollar dominance. I'm also not here to see the US decline. I am an American, so I do have my bias here. But as Kaiser was saying, I want to see if nation states are going to get into the quote digital asset space, then I think the best move is to obviously adopt Bitcoin, like we've seen El Salvador do, like we've seen Bhutan do. So look, I don't know if this is necessarily a good thing. A lot of people are championing this as a win. I think if you look at it in terms of, hey, if they're passing stablecoin legislation through the House or the Senate, then that's most likely means they're going to be a little hands off on Bitcoin. So on that note, I think we'll just kind of have to hold our breath on this one and realize, or rather hope that they don't just over-regulate things and really neuter the industry. So I do have some concerns here, but it seems like, we have bipartisan push for stablecoins right now. And of course, in the guise of US dollar dominance. And I think, though, the meme of Bitcoin as a Trojan horse for freedom, I think we're getting our heads through the door. So this probably might be bullish. I'm not as bullish as everyone else on it because you guys know I'm not the biggest stablecoin fan. I'm just like, be a Bitcoiner. Like, skip that step and just buy Bitcoin. And to me, that's really like what people should be doing. But I get it. The U.S. government is not going to be incentivized to push something to destroy their own power. Hence why they want U.S. dollar dominance. So this might be, a necessary evil. Maybe I'm not really sure on what I think about it, but hey, they're pushing through stablecoin regulations. I think we are at the very least turning a new leaf here, and we're seeing that the U.S. government is no longer afraid of digital assets. They're doing their best to embrace digital assets, and of course, by that I mean Bitcoin. So, tentatively optimistic about this, but I don't really like stable coins. So, it's hard for me to just say it's a pure W, but the real win is just Elizabeth Warren's response to this. So on that, I'm going to be stupidly bullish here. If she's mad, this is probably a good thing. This is my 45 IQ take on it.
Yeah, my 45 IQ take on this, Opti, is we got more than just our heads through the door. I think we are bursting through the door. I think Bitcoin has really burst onto the mainstream consciousness. And I think right now, every politician, every government, every public corporation is literally being forced to investigate Bitcoin. How big is that? Have a think about this for a minute. Microsoft shareholders, Amazon shareholders, Dell shareholders, they're all writing letters to the treasury and to the heads on those boards saying, you have to investigate Bitcoin as a strategic treasury asset. You can't just let the Giga Chad go from having a $1 billion company in 2020, like MicroStrategy was, to just buying Bitcoin and turning himself into a $100 billion giant. Okay, this is now undeniable. This is now something that cannot be ignored because, as Opti said, our head is certainly through the door. That is for sure. And I think Bitcoin is just, like we've touched on earlier in the numbers section, we're a $2.1 trillion asset now. We've gone from 0 to 2.1 trillion in 16 years with no marketing team, no significant lobbying for 12 years. I don't think anyone was lobbying for Bitcoin pre-2020. We have seen a little bit of this post-2020. But again, Bitcoin's just doing what it's doing. It's uncensorable, doesn't have a marketing team. It's not owned by anyone. It can't be changed by anyone. The rich have tried to change it in 2017. Who knows? Maybe some of the rich are trying to change it again in 2025. That could be a rabbit hole for another day. But Bitcoin is immutable money. That's all it is. It's immutable code that cannot be changed. Bitcoin is the only stable thing in a volatile world. And so far, we've seen hundreds of millions of people say that they value a thing that can't be changed in an ever-changing world. It's worth $2.1 trillion today. And I think in another 16 years' time, I think it's going to be adding a whole lot more than $2.1 trillion of value to its market cap. But that's just my take.
Yeah, you're just too bullish here, Luke. No. Conservatively speaking, I think you're right. All right, guys, I do want to do a follow-up on yesterday's bond market action, and I got a great thread by Mark Moth that explains it very simply for you guys. So let's get into that because I think this might be the canary in the coal mine. This might be the biggest thing going on, and I don't want to be a doomer here, but a lot of people, TradFi analysts, are saying this might be the signal that the bond market is going to blow up. And this is why we're Bitcoiners in the first place. Is we want our money outside of the system because it's all essentially, just waiting to blow up. And it seems like we might have gotten there yesterday and over the weekend in terms of the Japanese bond market. So we'll explain all this a little bit right now in the culture.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. Need liquidity without having to sell your Bitcoin? For more than 6 years now, Lyn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Lyn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledin.io today.
All right, guys. So we covered this on the beginning of yesterday's show, but we have some more sauce in here for you guys. So we have Kobayashi Letter here this morning tweeting essentially what is going on in the Japanese bond markets. And as you can see, it is still ripping upwards, guys. This is not a good sign for the traditional financial system. And here is a good summary of what is going on. So Japan's bond market is imploding. Japan's 30-year government bond yield has officially surged to its highest level in history. I repeat, its highest level in history at 3.15%. For decades, Japan was known for low long-term interest rates. Now they are dealing with high inflation, shifting policy outlook, and a whopping 260% debt to GDP ratio. On top of this, Japan holds $1.1 trillion worth of U.S. debt, making it the largest foreign holder of U.S. debt. And yesterday, Japan's Prime Minister Ishiba called the situation worse than Greece. What will Japan do here? Again, I know we've been, and actually, let me just pull this one up first. I was going to wait for this, but Zero Hedge kind of hit the nail on the head. Everyone was accessing so much over U.S. treasuries, they forgot the real bond shit show is in Japan, where the wheels are about to fall off and the countdown to yield control curve is back on. A Japan 20-year bond sale draws weakest demand ratio since 2012. And again, moving back over here, these things are completely tied here. As you see in this tweet, Japan holds $1.1 trillion worth of U.S. debt. And we covered yesterday, U.S. government debt, bonds, they're not in high demand right now. Our interest rates are rising. Japan's interest rates are basically going parabolic. Essentially, no one wants government debt right now. We saw Jamie Dimon basically say yesterday, and Ray Dalio, I wouldn't be in credit markets. There's a lot of concern going on in the traditional financial system. And of course, as a Bitcoiner, this is usually why we're like, oh, this is why you need Bitcoin. And of course, everyone in traditional financial world looks at us like we're crazy because we're just young kids, in t-shirts and hoodies and have crazy hair and we say crazy things and we just speak in memes. But Bitcoiners seem to have the best grasp of what's going on. As Kaiser's been saying, we are probably facing or maybe facing the bond apocalypse happening in real time. People have been waiting for this for 20 years and now it seems to be upon us. It's going to be interesting to see what happens. This could happen quickly. They could figure out a way to sweep this under the rug. But from a Bitcoiner's perspective, Mark Moss absolutely nailed it on this tweet, and this is really what I wanted to share with you guys today. So Mark Moss goes, Bitcoin is making new highs, but it's the other markets that are really telling the whole story. While both Bitcoin and gold make new all-time highs, it's the, quote, old guard store of value plunging and money is dying. The U.S. Treasury's 30-year continues ripping higher, signaling the long-term value is worth less and less. I repeat, signaling that the long-term value of the old guard store of value is worth less and less. And it's not just U.S. Treasury, it's all currencies collapsing at the same time. Germany's EU's economic engine is dying. You can see their bond rates are going up. The UK, the financial center of old money, is dying. Their bond rates are going up, which means, again, guys, interest rates, you can kind of just think of it very simply that the higher the rates go, the more they try to incentivize and gain interest into this debt. So if they have to continue to raise rates, or rather the market continues to raise these bond yield rates, it means no one wants to buy government debt. And that is not a good thing when you understand how the fiat system is built. It's all built on government debt. So Japan, Canada, Australia, it's all the same thing. Money as we know it is changing. Fiat and the fiat system is being replaced right in front of us. And as long as the central banks continue debasing, with 99% odds they will, the long-term trend on bonds will follow. Meanwhile, Bitcoin represents an entirely new asset class and a new breed of financial products for a brand new financial market. And for those that see this shift now, fortunes will be set. Bitcoin is the cheat code. This is what we say all the time as Bitcoiners. This is why we're Bitcoiners. Remember what it said in the Genesis block of 2009. Chancellor on the brink of second bailout. We all know, as Larry Lepard has been saying, the big print is coming. As Lyn Alden has been saying, the more respected voices in the Bitcoin space, nothing stops this train. Well, it looks like the train is leaving the station now with literally no brakes on. So it's going to, I don't know, it really is concerning here. Obviously, as a Bitcoiner, you're like, look, turn on the money printer, pump my bags, I'm going to be good. But it's starting to look like there is not just cracks in the system, but seismic, crumbling of the fiat system happening in real time. And again, Japan is the linchpin here. So if Japan implodes, this isn't just this is Japan's problem, we don't have to worry about it. No, this will literally, as the Japan's prime minister said, be worse than Greece was. And we all know what happened in the great financial crisis. It was a global phenomenon. And if this is bigger than that, we may be upon literally the monetary reset that we all kind of don't want to happen. You're seeing from the beginning of the show, you're seeing the U.S. government try to kind of impose new regulations and do this very soft landing, to use Jerome Powell's phrasing here, kind of slowly reset the new monetary order. We're seeing a lot of talks coming out of Trump and Powell and even, the bankers saying oh no, the monetary order is resetting, it's changing course. It might be that we are seeing that they don't have a choice here, that the monetary reorder is going to happen in real time because it has broken. And this is something Bitcoiners have been saying for a long time, that, look, they can kick the can down the road for as long as they are able to, but there comes a day where it breaks. And it looks like And I'm not trying to be a doomer here, and I'm not trying to just like scare you into buying Bitcoin, but it looks like the bond apocalypse is upon us. It looks like we are seeing this happen in slow motion. We are seeing the car crash happen right now. And I think this might be the biggest news going on. Obviously, as a Bitcoiner, you're like, I don't care about bonds. I don't even understand bonds. But you got to remember, bonds are literally the backbone of the traditional financial system. And if they're blowing up like we're seeing, things might get absolutely crazy. Yeah. As Atunian said, nothing stops this train except when it wrecks itself. Yeah, we might be at the point where it wrecks itself. Man, it's just... It is kind of getting concerning. I'm not going to lie. One of the things I like to see, and I've been kind of being hopeful about this, is like I want to see a slower transition into Bitcoin. And if the bond markets are blowing up, we might be seeing a suddenly moment of Bitcoin. And this is probably why we're seeing some of the biggest banks in the world, you know, the JP Morgans of the world, the Wells Fargos, UBS, you name it. They're all looking at Bitcoin very seriously because they understand the fiat system better than anyone else. And they're like, yo, I might actually need to get on this Bitcoin train because we might have a freaking global nuclear systemic problem playing out in real time. So we'll keep covering this. I mean, at this point, you'll probably see it on Main Street. Like I don't want to be like this is the end of times for fiat, but we've been talking about this for a while, and it might be here. Yes. Everyone's saying, you know, watch The Big Short, watch Margin Call. The music has stopped and all I hear is silence. Guys, look, I don't want to say this is it, but from the writing on the wall, it's not looking good. And this is why you need to have Bitcoin. Like, this is literally the reason why you need to own Bitcoin. So things are going to get hairy out there. I think a lot of people are asleep at the wheel right now. But yeah, there's a fundamental problem. And if you're watching the bond yields right now, it is telling you something that you should take notice to. And on that point, I think the people with the real money are paying notice to this. Hence why we're seeing this narrative shift around Bitcoin and people saying, hey, maybe my price predictions are way too conservative because everyone might be jamming to the exit door and Bitcoin is that exit. This is crazy stuff. Yes, as Lou says, Japan just got margin called. And yes, we really are in an echo chamber because no one understands what's going on. A lot of people can point at the problem. Few people can see the solution. We still get called cult members and we're like, hey man, we're just trying to get you on the safety boat here. Like, don't kill the messenger here. There's a problem. You probably want some Bitcoin. And they're like, nah, you're in a cult. You're an idiot. You're like, all right, man, you know, I tried. But we're still trying here. We're still doing our best here. Hopefully some new viewers here are like, wow, maybe these kids actually understand what's going on right now because things are getting crazy. It is starting to get nuts. I see your chart here, Luke. So I'm just, oh no, you have the Weimar chart, but you'll talk about that later. So I'm gonna just pass it on to Luke. Luke, what you got source pulled up?
I got a few saucy pieces of information pulled up, but it is during those great rants that you just went on, Opti, that I wish I had root access to the horns for you guys because that was incredible. There we go. Absolutely. I think we are seeing a bond apocalypse right now. I think it's huge that we literally have people in the Japan government. They're openly saying it's worse than Greece. What happened in Greece? The country blew up and they froze your money for 3 years. This is what happens when fiat dies. But I think what people need to conceptualize and eternalize is that when fiat dies, it doesn't do so in a predictable, easily tradable manner. I'm like you, Opti. I'm really hoping that I am wrong. And I'm hoping for a gradual, slow transition. But I think it's going to be more volatile than most people think. You make a great point, Opti. The entire fiat system is essentially pegged to Japan. Japan is the one country that actually hasn't defaulted on their debt yet. I really love the study that Hirschman Capital did a couple of years ago, massive hedge fund, and they essentially found that, hey, since the year 1800, 52 countries have reached government debt to GDP levels of more than 130%. And of those 52 countries, 51 of those countries defaulted on their debt within 15 years of hitting that 130% debt to GDP ratio. And a lot of Keynesians have come out and said, look, Japan's the exception. Japan has now proved 200 years of data wrong. Because Japan has a 270% debt to GDP ratio, we can trust that the fiat system works. We can trust that we are now living in modern monetary theory, where the rules have changed. Ignore the past 200 years of data of governments blowing up when they hit 130% debt to GDP ratios. The Keynesians, like Stephanie Kelton and co, will tell you, look at Japan. Aren't they so great? We should all turn Japanese. This is what everybody's saying. But I actually think what's far more likely is that Japan is the exception to the rule. And all of the Keynesians and the modern monetary theorists, can you guys hear them right now? As Japan is blowing up, they're silent. Why are they silent? They're silent because Japan, they were the poster boy for modern monetary theory. They were the country that everybody pointed to and said, look, 270% debt to GDP ratios, ignore the fact that they had 3 decades of lost growth as their stock market, the Nikkei, took 3 decades to recover to a new all-time high. Forget the fact that the central bank owns 70% of all the bonds in the country. Forget the fact that the central bank has to buy stocks to try to prop up the dying stock market. They just said, look at Japan. It hasn't blown up because it has so much debt. It's a great, healthy economy. And now Japan is blowing up. The yen's lost 50% of its value against the US dollar since 2020 alone. Think about that. The yen has lost 50% of its value just against the dollar since 2020. How much value has the dollar lost against goods and services since 2020? I know my steak's at least twice, if not 3 times more expensive in the US, priced in dollars. So how much have the poor Japanese lost? If the dollar's down by 40% against goods and services on average since 2020, and the yen's down by 50% against the dollar, you guys do your maths at home. But I think it's pretty clear that this modern monetary theory experiment in Japan is not only crumbling, but it's dying at a pretty rapid rate. Yields blowing out to their highest rates in 20 years. I do have the chart of showing you guys what actually happens when fiat dies. In the Weimar hyperinflation in 1923, it was not a slow and transition, a slow and predictable transition. We blew up rapidly. Have a look at how many spikes bigger than 80% we saw in the price of gold denominated in the German mark. You guys can see we saw a complete monetary reset happen in 7 years of massive volatility, huge volatility that we'd never seen before. But along that journey, we saw 8 corrections bigger than 80% in the price of gold, the new money. So again, this is why I think the transition to a Bitcoin standard will be more volatile than most people think. It's like once the toothpaste comes out of the tube, there is no going back in. And what's the old analogy or saying goes? When you yell fire in a movie theater, everybody races for the exit, but there's just simply, the doors are not big enough to squeeze 500 people out of the movie theater. And I think the same analogy can be applied to Bitcoin. We've got a crumbling $300 trillion debt market. And there's, you said it earlier in the show, Opti, 94.5% of the Bitcoin has already been mined, meaning there's only 5.5% of the total Bitcoin supply left to be mined. And as we keep talking about in the show, the banks who are adopting Bitcoin in a really big way, a lot of these guys are coming into the Bitcoin space and they're holding this thing. I don't think all of these banks are going to be just trading their Bitcoin. I don't think that is why a lot of these big banks are adopting Bitcoin. I think a lot of them, again, I don't know, but I think many of these big banks, we're trying to emulate what the Giga Chat is doing. Michael Saylor is openly saying, I want to hold Bitcoin for 100 years. I think we're going to see a lot of banks try to emulate this Saylor strategy because they know what's coming. They know that when fiat dies, there's going to have to be a replacement. I think these guys are slowly starting to see the light and they're slowly starting to say, hey, just in case I'm wrong, maybe a 1% allocation to Bitcoin might protect me just in the event that I'm wrong. And we always talk about it here on the show. Going from 0 to a 1% allocation, that's the hard part. Getting off 0 and admitting I'm wrong. Not holding Bitcoin was a wrong position. I need to dip my toe in the water. Finally coming to that realization is so much harder than going from a 1% allocation to a 10% allocation. Because once you have that 1% allocation, it starts increasing in value. You naturally want to learn more about why this crazy internet money is growing, and it's slowly becoming 1%, 2%, 3%, 4% of my total assets. And then all of a sudden you're like, hey, 1% of my money is in Bitcoin. The other 99% of my money is losing value compared to the Bitcoin thing. Why don't I just buy more? So I think this is a lot of signal. This is huge confirmation that a lot of these banks are getting into Bitcoin. Jamie Dimon, CEO of a $4 trillion giant, JP Morgan, quietly buying MicroStrategy. Again, as we continue to say here on the show, I don't think Jamie Dimon is buying MicroStrategy for their business intelligence services. They're buying it to get exposure to Bitcoin, the new money. What do you think, Opti? Do you think these guys are forced to get?
I think really kind of connecting the dots with what we're seeing in the Japanese bond markets. And of course, we've been watching treasuries for the last we're all macro experts now. I think it's not a coincidence that they are, actively now changing their tune and being like, yeah, hey, we'll sell you some Bitcoin. We're getting some MicroStrategy exposure. I think that is, like you said, confirmation that they know what's going on. They know what's coming down the pipeline, and they are scrambling and trying to get in position. And I've been saying it for a long time. The billionaire fund playbook is simple. You say Bitcoin is what? Rat poison squared. It's akin to smoking cigarettes. It's going to boil all the oceans. It has no intrinsic value. It's infinitely divisible like pizza. It's, like my teeth are scarce. Why does Bitcoin have value, et cetera, et cetera, et cetera. You FUD it, you buy Bitcoin, and then you announce your Bitcoin buys later. And one thing I do want to wrap this up right now, Luke, but I do want to kind of echo what you said. Looking at this chart, I think you might be right with the idea that we won't be having prolonged bear markets, but we will probably see like 80% drops again, but maybe for not that long. So just like when you said that earlier, I was like, maybe. But looking at this chart right now, that might be what happens. Anyways, Luke, we went a little long today, so guys. Say thank you to Luke. Luke, plug your socials real quick, and then we will wrap it up. So Luke's going to be on the show a lot more often, guys. You better get used to the crazy haircut. Luke is going to be, our number 3 on the show here.
Yeah, and the haircut's only going to get more wild for you guys in the chat. Because what do we always say? Haircuts, they're a poo coin. Okay, why spend money on a haircut when you can stack more Bitcoin? I
need a haircut right now, guys. I'm not gonna lie.
Oh, look out!
No, that's why I got the hat on. That's why I got the hat on.
All right. Yeah, so anyway, I also talk trash on YouTube, and if you want to tell me I'm crazy, if you want to tell me I need to get a haircut, you can come and find me on YouTube and do exactly that. But thanks for having me, Opti, and thanks to everyone who stuck around.
Yeah, man. Well, appreciate it, Luke. Let me pull you behind the scenes and wrap it up. All right, guys, today what's this episode number? 1248. It is Tuesday, May 20th in the year 2025. I've been your host, Opti. I really hope, we hit some new angles here, and it's not just Bitcoiners. We're trying to get new people to understand why we Bitcoin, why we're so vocal, why we're okay with you calling us, being a part of a cult here. Look, the writing's on the wall here. And I think Bitcoiners are the only ones with the solution, the only ones that actually can help change this system. And as we're seeing, whether you like it or not, the monetary reset is happening in real time. You might want to buy some Bitcoin just in case it catches on. So on that note, I will see you tomorrow.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.